Oh, hi, good evening. This is Lee. This video is about the new features that I added to the Mammoth PMC for ES strategy that is primarily trading on ES. The feature is basically a trailing stop that is you can adjust based on your goals and uh, objectives of trading on ES. Okay. Now you can actually in this strategy you can uh, set up your own ATM strategy with the features that I put into this strategy. Now I have okay. I'm sorry. Yeah, I had a data that started from July 7th and stopped at August 9th. A data for ES September contract. I ran from July 7th to August 9th data, right? That is a little bit over a month, but um, because there's a weekend involved. So, anyways, the strategy that I had a four ES charts loaded. Okay, the first ES chart that I had a strategy PMCE PMC for ES with trailing stop. That is the new strategy that I have updated, and I was going to release it, but then I just have to run it and to do a comparison for you to see if it's necessary to use this feature or not. Okay. Now the second tab is also ES chart with the same settings. They're all same settings on unirangle bars. But this tab has different settings on the trailing stop. Okay, and I'm going to show you later. And the third tab is also the same strategy with trailing stop, but settings are a little bit different. The fourth tab is the original Mammoth PMC for ES strategy with no trailing stop features built in. So, okay, let's go to the first tab. This strategy on this tab was set right here. Target is the same, 10 ticks and 25 ticks stop loss. Trading time is the same, 2 a.m. to 1:30 p.m. Okay, daily profit target we set at $1,200 maximum, and daily loss is $400. And once you hit $400 in loss, then the strategy would not look for another trade. And now here's the feature that I was talking about, the trail trigger. I've for this chart, I set the trigger at 4 ticks, and trail distance is 25 ticks, and trail frequency is 5 ticks. HP is the same, and this strategy is trading on one contract. Now, it's a little bit, but you might want to, let's see if I can make it a bit larger now. It's a little gray, but anyways, I'm gonna just tell you the trail triggered 4 ticks means that once the market moves into your favor by 4 ticks, then the stop loss will move from the original stop loss, which is 25 ticks away from your entry price. That's the original. But once the trail triggers, means that once the trade moves in your favor by 4 ticks, then the stop will move 20 move to create a distance from your current price, which is 4 ticks from your entry price, by 25 ticks. So that's basically trailing. In other words, that if let's say if after you get 4 ticks and the market starts turning back to the opposite of the direction that your trade was entered, then if the market turned and got to 25 ticks in the opposite direction and you got stopped out. However, the actual loss is not 25 ticks because you've already added 4 ticks to your entry price. So that means you have to do a subtraction. After that, you actually net loss would be 21 ticks, not 25 ticks. Okay. the trail frequency is 5 ticks, means that after the trail triggers after 4 ticks in moving in your favor, the trail will be 25 ticks away from your current price. Then, if the market is still moving to the direction that you want, once you get to another 5 ticks, then the trail starts again a move towards to your new price, which is 4 plus 5 is 9, and then from that point on, 25 ticks away, which would be your stop loss. So in other words, that 25 minus 9, you're looking at 16 ticks. That is the stop loss level if the market turns around and move 16 ticks from your high or the higher high or lower low, and then you'll get stopped out, and that you will have 16 ticks in loss. So in this situation, you can also set up a called a break even. Basically, you can do a trail trigger. If you say, okay, I want to I want my stop move to break even level, means that you're gonna have to if your trail trigger set at 4 ticks, and then your break even, your trail distance has to be 4, not 25, because that it's a break even, means that, and if the market turns around and drops 4 ticks, then it's going to hit your trail stop, and then you'll get stopped out, which means that your trade will be um, at the level of a break even. So that's the way you can use it with this feature. I hope you understand what I just explained. If you understand ATM strategy, you understand what I'm talking about. So now for this strategy, okay, I set a trail trigger at 4 ticks, and distance is 25, and frequency is 5. Okay, what I means is that when you have an entry price right there, for example, this is a example that can this is today's trade, right? Now the entry is 4534.25. Your entry is right here. The original stop loss is 25 ticks away. So that means that you'll have let's say 6 points plus 1 tick. So 34 minus 6 will be 20. 28. So then, but the thing is, the stop loss actually was at the 45.30, and that's 4 point and then 1 tick. So that's 17 ticks. You got stopped right there. Instead of 25 tickets, which another right here. So you basically saved some of your losses right here. So the overall loss is 216 instead of 325. Okay, so that's what the trailing stop is supposed to be. So now on this chart, I have the trailing stop set at that way. The second the second chart, the strategy, the trail trigger is 9 ticks, and distance is still 25 ticks. Trail frequency is 1 tick. So every tick going to your favor, and the trail will move 1 tick or get close to the point that at your high or low. So that's 9 ticks as a trigger, and 1 tick as a frequency, and 25 ticks as a distance. Okay, that's the second tab. Third, the strategy, basically, we have the target set at 25 ticks, not 10 ticks as the other two, because once you have a large target, then you can actually trail better. You might hit more profit. But then we're comparing it. I don't personally use this, but you can actually play with it if you want to use this strategy. So anyways, I set at the trail trigger at 10 ticks, and this is 25 as always, and trail frequency is 5 ticks. Okay, so this one we're targeting 25 ticks. The last tab is the original one. Okay, now let's look at the performance result based on the playback data. The last tab we had 3 contracts per trade, and the real-time performance. Okay, we look at this number, and we have 7 losses. So, anyways, you actually can look at um, this strategy right here. We have realized profit $7,485. Okay, now let's go to this one, which we said is a larger target, 25 as a take profit, 25 ticks as a take profit, and then we can look at the performance on this one, and we have a net $1,078.50, and the profit factor is low. This strategy, this setting is not profitable. Okay, once you have below 1.4, that's not profit. Look at, you have 27 losses and 23 winners. So now you know that is this one. Okay, now we go to this strategy, which we have 9 ticks at the triggering, and we have $2,900 in profit, and the profit factor is 2.78. We have 7 losses and 43 winners. Okay, so that's the 9 tick at the trigger, which I believe is this one, because we had we start from July, but there are 2 days before July, the trades also counted to the overall performance report. Let's say now the first tab, we set a trigger at 4 ticks. All right, same thing, and we start trading. Actually, the report is from a 4th, but we want to look at it's actually from a 7th right there. Okay, now we have similar results. Okay, similar result as this one, the 9 tick triggering. This is a 4 tick triggering. Distance is still the same, 25 ticks, but this 9 tick triggering, the frequency is 1, and 4 tick triggering, the frequency is 5. So these two actually perform almost identical. But then you look at the so then what I'm trying to tell you is that for a scalping like this, you only target 10 ticks. So this one, we only target 10 ticks. The trading stop is not really necessary, but it can protect you from some stops. Like today, because of the trailing, we had a less loss than it's like we had like $100 less than the original stop loss. Okay, so that is the benefit of it, but not that much difference. So if you want to use trailing stop, you want to target a little bit further, but then that also creates risks. So it's completely up to you if you wanted to use this feature, and I'll have this on the website soon. I'm just gonna have to do some touch ups and to make sure that everything's good. But original strategy with 3 contracts, you're looking at this net return. So this one, 3 contracts, if you divide it by 3, you look at somewhere around 2,500 bucks. Okay, with the 1 contract. So not that much difference with trailing stop. If you have a very small target, which is 10 ticks. So if you want to see, if let's say if you want to drive this one, that's a large up run, but then that's just a historical. I mean, before you don't even see it. So let's say if the market runs to this point on, how do you? I mean, it's predicted that because the bottom is forming here and the chop here. If you look at the volume, some other price actions, whatever, the reverse most likely will happen because of downtrend like this. But then that's just a speculation. Now, if you manual trade, you can always move your target up and then move your stop up. That's a manual, definitely. You can do that once you see a trend like that, right? But for our strategies, you can't move your target and the stop loss unless it's built into the strategy. So, okay, this is the explanation of this feature that I just put it into the PMC for ES strategy. Basically, it is trading on ES. I hope you understand this whole thing. If you don't or have any questions, just email me and I'll do my best to help you to understand it better. And I'll have this up soon. Once it's up, I'll send out email to everybody. All right. Thank you very much for watching.